Our ninth objective for Chapter 1 is to explain and prepare financial statements. Financial statements for a proprietorship consist of 4 items. They are the income statement, the statement of owner's equity, the balance sheet, and statement of cash flows. In Accounting 101, you're responsible for the first 3, the income statement, the statement of owner's equity, and the balance sheet. The statement of cash flows reflects the inflows and outflows of the business and will be talked about extensively in Accounting 102. What's on the income statement? It reports the profitability of the business. We said earlier that revenues minus expenses is equal to the net income. Okay? This represents a change in the owner's equity or the capital in the business. Revenues minus expenses equals net income. If the expenses are greater than the revenues, then we have a net loss. So on the income statement, what did we earn as far as revenues? What expenses did we have in earning those revenues? The difference being net income if it's positive, net loss if it's a negative number. The second statement for a proprietorship is the statement of owner's equity. Okay? It's the change in owner's capital during a specific period. Okay, so the owner has $10,000 on January the 1st. That would be his beginning capital. Okay, beginning capital, $10,000. We add net income, or we subtract the net loss, then we would subtract withdrawals, and this would equal his balance at the end of the accounting period. If it was for a full year, that would be December the 31st. The next financial statement after the income statement and the statement of owner's equity is the balance sheet. The balance sheet reports the assets, the liabilities, and the owner's equity as a specific date. Okay? The income statement and the statement of owner's equity represent the activity over a period of time, where the balance sheet reports the assets, liabilities, and owner's equity as of a specific date. Okay? And you'll notice that the balance sheet contains those items from the accounting equation, assets being equal to the liabilities and the owner's equity. Okay? Next slide. The statement of cash flows reports the cash receipts and payments during the period. What did we take in as far as cash? What did we spend as far as cash? Again, we will cover this topic in Accounting 102, but you need to know the 4 financial statements that are generally required by GAAP. So if you return to exercise or problem 1-33A on page 41, the other requirements for the problem say to prepare an income statement of GAAP for the month ended September the 30th. So if we did an income statement based on that problem, it would look like this. Okay, let's point out some important features of all income statements. It's always who, what, when. Who is GAAP? What is the income statement? When is for the month ended September 30th. We had service revenue of $5,400. Revenues are always on top. Expenses, remember we only had rent and advertising expenses. Okay? How do we list out the expenses? We always go from highest, rent, to lowest, advertising. On an income statement, we always list the expenses highest to lowest. We total up the expenses, $1,300, and subtract them from the revenue of $5,400 to come up with net income for GOP in the month of September in the amount of $4,100. So that's what an income statement would look like for problem 1-33A. Requirement number 3 of the problem says prepare the entity's statement of owner's equity for the month ended September 30th. Okay, so the statement of owner's equity would again start with our who, GOP, our what, statement of owner's equity, and our when for the month ended September 30th. At the beginning balance at September 1st was $13,000. He made investments totaling $11,700. The $4,100 of net income flows from the income statement. $4,100 we just calculated as the net income. We put in a subtotal $28,800. Okay, we subtract his withdrawals. That was item J of $2,200. His ending capital balance at September the 30th was $26,600. You'll notice, where are the dollar signs? Are they on all the numbers? No, they're at the first number, at the subtotal, and the ending number. Okay, so I said you're responsible for 3 financial statements. We've done the income statement, we've done the statement of owner's equity, so the only thing left would be the balance sheet. The balance sheet starts with our who, what, when. Okay? Remember, we said the balance sheet is of a particular date and time. Okay, on the left side, we list out our assets. Okay, so these answers come from the end of the problem from our slide on problem 1-33A. We had $8,500 in cash, accounts receivable was $5,200, the supplies went down to $600, the land was valued at $13,000. We total them up, $27,300. On the other side of the accounting equation, we've got our liabilities, accounts payable of $700, followed by our owner's equity. The amount for Marilyn Manson's capital comes from the statement of owner's equity, $26,600. That flows down to the balance sheet, $26,600. Add up the liabilities and total and owner's equity, we come up with $27,300. You compare the assets, $27,300, to the liabilities and owner's equity, we are in balance. So, you're going to ask me next, Mr. Cunningham, do we have to do the financial statements in those orders? Income statement, owner's equity, balance sheet. Yes, yes, and yes. We always do it in that order.